Welcome tycoons. Today in this video, we will be taking a look at tips on how to invest in stocks for beginners in 2023 and beyond. Now before we get into the video, if you are new, make sure to subscribe to the channel, hit that like button, and leave a comment below, saying, "I subscribed." And we will do our best to personally reply to your comments. Quick disclaimer. It's important to note that we are not financial advisors and you should do your own research when picking stocks to invest in. These are just some of our viewpoints. By no means would we recommend watching one YouTube video and then immediately buying that stock. This video was made for educational and entertainment purposes only. Consult your financial advisor. Here in Project Billionaire we inspire and give value to future great magnates. Since I began investing many years ago, 2022 has possibly been the strangest year that I have ever experienced. Now that I've said that, I must admit that I feel bad for those new investors who are just starting out in the stock market, since it's really difficult to navigate these murky waters if you don't know what you're doing. Nevertheless, that is the reason why I'm making this video. I want to give you a foundation so you can avoid getting burned while navigating these, shall we say, intriguing times. Now, it won't turn you into an investing genius in a single video, but it will put you on the right track to investing wisely during uncertain times. I'm going to share with you 5 principles that I use, and the best investors use them to outperform the market over the long run. Let's get started. Number 1. Control your emotions. The ability to control emotions is one of the characteristics that will distinguish excellent investors from typical investors in these times. Jordan Peterson suggests that we be the trustworthy ones during a relative's burial, so let me use an illustration. It's crucial that we take that advice a step further and apply it to investing. Especially when making investments during and following a market crisis. You see, 90% of people think like this. When their stocks rise, investors buy. Their emotions are all caught up in the ups and downs of the stock markets, and they go tell their friends at the bar how much money they've made and check their stocks weekly, if not daily. However, the small percentage of investors who do the best are the ones who act in the exact opposite way from what those guys do. The successful investors are actually relieved when the value of their stocks declines, because it means they may purchase more of them for a lower price in the long run. They understand that the lower the price at which they invest in stocks, the greater the returns they will receive. Buffett claims that you're dealing with a lot of foolish people in the market because it's like a huge casino and everyone else is drinking buy low sell high, but the majority of investors act in the opposite way. Number 2. Select your area of expertise. If you want to have an advantage over other investors and receive great returns, you must invest in markets that you are familiar with. As a result, I advise you to step back and evaluate the subjects you are already knowledgeable about. If you're a young man, you might work in the gaming, artificial intelligence, social media, or another technology-related industry. If you're older, you might have an advantage in industries that are more developed, for example, hospitality, travel, wine, and food, because you have experience in such fields. Buffett only employs the more established company strategies that he is familiar with, such as the sweets retailer See's Candy. That business model has existed for a very long time, and Buffett is aware of it. Buffett spent a lot of time trying to understand concepts like insurance. He is so adept at the game that he can choose the businesses that make good investments. And you ought to follow Buffett's lead in doing the same thing. As I said, if you're young and you enjoy playing video games, you probably know more about the industries that will dominate in the future than the majority of those businesses. And which industries will prosper. Because of this, one of Peter Lynch's most famous quotations is so straightforward yet so profound: know what you own and know why you own it. The majority of investors, as you may have noticed, desire financial success across all sectors. They want to discuss all of the businesses they own with their pals at the bar. But they don't always stick to the fields they are familiar with. You shouldn't be like most investors because they rarely know precisely what they own and why they own it. Are you enjoying this video? Consider hitting the like button and subscribe. Number 3. Become familiar with the game. Supposedly, I approached a total stranger who had never played poker before and asked, "Do you want to join me and my pals for a game of poker? We'll each put in $500. If he accepted the challenge, that guy will be dumb. He was going to lose money and get destroyed because he had never played before. Then if we take that and apply it to the stock market, you'd be surprised at how many novice investors don't actually know the fundamentals of making an investment. They get creamed after a year, 2 years, or 3 years, which is what inevitably happens. If you're new to the stock market investment game, especially in these uncertain times 2022. Okay, let's start with some fundamentals. One of the most crucial measures is the P/E ratio. In essence, it assesses how much you pay for a stock in comparison to the revenue it generates. In addition, return on equity is a fantastic indicator for assessing how effectively a company generates profits. Do you understand how stock market orders work? Define what a limit order is. The market order. A limit stop order. Prior to investing, you must be aware of these factors. You are aware of how well you understand the Warren Buffett technique for value investing, which consists of a variety of various core strategies. Purchase at a discount to intrinsic value. Do you understand how the dividend aristocrat strategy works? A group of equities into which you can dollar cost average and, at least historically, outperform the market over the long term. Before you become an investor, it's crucial that you understand these basic concepts and simple techniques that you may use to understand P/E ratios. Number 4. Ignore minutiae. Although it is one of the easiest rules to follow, it is also one of the most difficult. The majority of investors are consumed by the daily and weekly news of the stock market. The problem is that every time you receive news, you experience some sort of dopamine high. 90% of the investors are now hooked on the stock market's short-term activity as a result. Now, I wouldn't have a problem with this, but it does negatively affect your investing strategy and, eventually, your investment results. One of the issues with looking at the extremely short term is that you don't notice the long-term patterns that you are going through. These are typically little dots of a longer-term pattern that is happening if you look at the stock market over a week or even a month. Therefore, if you're committed to the short term as an investor, your judgments will be based on that, which will often result in lower investment results. This is why Warren Buffett advises investors to only buy something you'd be perfectly happy to hold if the market shut down for 10 years. And to don't worry about the everyday news and the details. Number 5. Know the market cycles. Now the next thing that you really want to be getting your head around is market cycles. Especially in 2022 when we're in them. The later stages of the cycle. Now what I'm talking about is getting to know what stocks do well in which period. Let me share with you a bit of an old school graph which will help you do so. So as you can see, during the early to middle stages of the market cycle, the likes of transportation technology and capital goods stocks tend to do well. Why? Because things are starting to expand, the economy is starting to heat up, so transportation is more required. Technology stocks are normally selling for a song during these times and they can take off big. AKA, if you invested in Netflix, Tesla, Amazon 10 years ago, was the time to do so just when the market was starting to heat up. But during the later stages of the cycle, the more conservative stocks start to work better, the likes of consumer non-cyclicals and healthcare. So why is that? Well, because even in a market downturn, people still need to eat. They need toothpaste, soap, clean water, etc. So consumer non-cyclicals are safer to own, they also need their health taken care of, so healthcare stocks during the latter stages also work well. And this is what I'm talking about. As a beginner entering into the stock market, you need to wrap your head around these things. You need to know what stocks do well and when. As the saying goes, you can buy the strongest stock in the world, but if it's in a weak sector you can lose. That's one of the reasons why I like to follow Ray Dalio. He gives historical evidence and he relates it back to today to give us an idea on where we are in the market cycle, and then I can organize my portfolio appropriately for market conditions in 2022. So if you're a beginner investor, obviously I'm sure you wish you started 10 years ago when the economy and the market was in the early stages, but at the end of the day all you can focus on is the market conditions that we are currently in. And these little tips that I've shared with you, they're going to help you navigate the waters for these unique market conditions in 2022 and going forward. I wish you the best of luck everyone, and I hope you can get those high investing returns. Hope we were able to give you valuable input and help you get to the next step in becoming financially free. Check out the links in the description below. Thank you all for watching. Make sure to subscribe and like the video. Until then, we'll see you in the next one.